Hi guys, just a quick euro dollar update for the Discord group. We'll post this again on YouTube. A lesson for everybody. Now, in the Discord group, I'm predominantly focusing on just the euro dollar. Why? Because there's opportunities whether you're on higher time frame or lower time frames. There's going to be a lot more lower time, like the daily 60, 1 hour, 15 with 1 minute entries. So even if it's 10 pips, 20 pips, just showing the methodology how it works, so you can ingrain into your head what I'm always looking for, repeat patterns. So let's talk about this euro dollar. Not going to do the full top down analysis. If you want to understand what I'm talking about, please, and it's very important that you watch this lesson and euro dollar gold analysis. This is from last week. This one was from this week, what I'm looking at. Now, one of my traders has already made profit and prices come up where I got stopped out. I'm going to talk about that now and look at the analysis I've done this morning on the Discord, just what I was expecting to happen and why my bias is very neutral, you know. So let's go into the euro dollar. So this is the monthly. I said it could potentially be rolling over. Not going to do a breakdown of that right now. We're looking at the weekly. Potential fake out or reversal. It could be either way, but if I come down to the daily, I've got this A, B, E. Now, when I've got a pattern like this, whether it fits an A, B, E, a supply and demand structure, a breakout setup, anything like that, then I'm going to follow that pattern as my final target. So this was my entry yesterday, and this is always my final target. Now, I'm going to break this down on a lower time frame. This is the daily, because one of my traders, Astar, yesterday. Let's go into the Discord group very quickly. I always say names wrong. Yeah, Astar A. He's from India. He was posting how he's looking at it. He's not going for high reward to risk ratios. He's like doing 3-to-1s and stuff. And he hit his target yesterday and price reversed because I already posted in my videos where price might go, where target 1 should be, where target 2 should be, because price could turn at these other lower time frame ABEs. So with that said, let me just show you into this, and then I'll show you what I posted and what happened yesterday. So that's it. I just want to short here until price tells me otherwise. It could be a breakout. There could have been a breakout, and it still could be. We don't know. So yesterday, price had come up into this area here, and this is touching this ABE. Slightly into fake out, and this is where I took my trade with my stop above the high, and so did Astar A. Now, he caught his move down, which was here, took his target before this, or at this trend line, just before, and then price came all the way back. I did not. Why? Because I'm playing the big pattern. Put it this way, you can profit when you're doing a shorter term trade. Your trade management can profit as well, taking partials, where I will lose, but then when I hold, you will take partials and small profits when I get the big one. There's no right and wrong. That's what I'm trying to say. There is no right and wrong. All I want to get people to do is understand price action, and then not make your trading decisions based on emotion, because I've done it many times. Occasionally it creeps in, and I know I've got a clear, not grey area, black and white area. When white, I know there's a trade set up. Black, I'm now trading into possible emotion, so therefore don't take any trades at all. Just if you've had a couple of losses, even if that trade setup was going to be a winner, it was in that black area where 9 out of 10 times I'm going to keep losing. Does that make sense? So just for the one winner, I don't want to be making 9 losses on another situation or setup. So it's a very clear-cut area for me, and that's what I'm trying to do in the Discord group, so that people can see I'm not just, you know, trading on emotion. I'm using my technical analysis that work over and over again. So price came up, I got stopped out for a loss, where another trader's made absolutely 3-to-1, great profits, took another setup last night but got stopped out. Fine, he made 3, he's lost 1, so he's still 2-to-1 up. I'm still 1 down. If we look at it that way, 1% down, he might be 2% up. If we look at it percentage scales, he made 3% yesterday. I risked 1%, lost 1%. So he's 2% up because he had another loss, and I'm still 1% down. So I've took another trade, If he done another trade like I'm doing now and he lost, he'd still be 1% up when I'll be 2% down. But when I hold for this big target, which is what I'm doing next, and I'm going to show you other trade management for you as star A, because this might help you. Right now is if you was in the trade, which I believe you are again, or you was either getting in again or got in again, this is where your target would probably be for you, okay, down here. Or maybe if you want to drift into going for this, come down here, take off 2/3 of your position, okay, take off 66% here, move your stop to break even and let the rest run. You know, and maybe you can start to get in some different day trades with different profit targets. But ideally, you can start to then drift into trusting the bigger patterns over time. And all you've lost is 1/3, or even take off 75% and leave 25% on. Whatever's comfortable for you. I don't want your emotion to get involved. Write it down, and then you know what you're doing. So that's just a bridging way of moving into trusting the patterns that are setting up. So my trust is in this A, B, E into fake out area, and I discussed that, and I will bring up the Discord exactly what I went through this morning when I woke up and what I saw, and I just repeat and rinse and repeat, and hopefully our star's now getting it now. He understands what we're talking about. So let's go to the 240. So this is this area. He made his profit here. This is this 60-minute /240 initial move up. This is the big move. We don't know the daily candle is really changing until we close below this big trend line here, which I said last week, by the time you do, most of your profit is gone. So when I've got a pattern, I will get aggressive. Okay, so I've only had one loss being aggressive, and now I'm in the second one right now. So this is what the 60-minute looks like. This is this trend line from here. It was initially drawn like this, and then we had this spike up. But I'm going to just explain another little lesson in this. When this was initially the touches that I was drawing here, this to me is a bit like the fake out. If we go to a 240, you'll see it on the wicks, you know. So we've got this here, fake out. So what I'm expecting is now, if price is going to break, we will start to get this kind of candle and close, which I'll come into in a moment. I'm expecting. Doesn't mean it was going to happen, but I'm expecting. How did I get in this area again? This is what I've done this morning. So if we come down to the 60, and I'll keep the candles enlarged, anything below this, what was classed as the fake out, I'm looking for a new setup. And we can adjust the trend line definitely to here, but this is the confirmation once you're below here, which we're getting now, because that was the new rally up. So this area, that was what I was interested in. And what we had is we got this rally, base, rally. Now from this base, we made a higher high. There's even a little bit of a rally, kind of base rally, but really this basing, which is like the 240 base. So if we come up, maybe you can't really see it, but it's this in this area, the 240 base /6, somewhere in between. I don't have a 2-hour chart, but this is what I was interested in removing. Now price came down, just reacted from there, and then we had this close. I wanted to look inside this candle, the structure, because it wasn't very clear. And this is the structure. Look, rally up, base, rally, base, rally, come down. We have initially closed below that, which is good, but I wanted to get past this area. So we based, come down, and closed below. Closed below. Let's enlarge that. This candle closed below, creating this level. So as soon as we had that, I wanted to short that market. So once price retraced, I had a short in place of 10 pips, because it's about 9.3 pips, and I'm going for 150 pips. So it's going to be over a 15 to 1 trade. Okay, not for everybody. Now, yesterday I had my stop above the high. Today I did not. And the reason why is because this little move here is actually in fake out area on the daily. It's actually in fake out area. And in my experience, if price fakes out, it should continue dropping like this, if it's going to work. I tend not to get, like here, double tops. where this is one 30-minute candle. This is another one. If you look on a smaller time frame, it's a double top. We tend not to get that. Okay, so if I come out to a 60, you can see you've got two 60 equal candles. Tend not to get that. So my stop was more stricter here. And if I got stopped out, it could have reached it and dropped. That would be 1 in 10 that happens like that. I'm not interested in trading it. I'm expecting possibly a range and then a breakout. And I've got a breakout video in the Discord group, and that's what I'll be looking for next to go long. And the reason why, if we look at the weekly candle, let's look at the weekly candle. We've had a fake out here of this high. We spoke about this in another video last week. Fake out here. This could be a fake out again. Even though we're into some form of demand, everything is down. Again, go back to the previous videos. So I'm looking at, it's Thursday. If it's going to drop, it's got to drop strong now, because we're coming Thursday into Friday. And then I want to see a red candle. But we could end up with a big green candle. And if we break from this area, so we're no longer going to fake like this, we're potentially going to have a strong big green candle. That's my expectation. So now I know what to look for on my lower time frames. So now what we've got is a break of here, and it's a 4-hour candle, which is only just opened. So it's into the first hour. If I drop down to the 60, ideally, 60-minute close. It doesn't mean it's going to happen, by the way, chaps. I could well get stopped out. Okay, I'm not on about winning and losing. I'm understanding price and trading on structure and technicals and non-emotion, using the fundamental principles of technical analysis, and knowing when to stop trading when something's not right, and waiting. So your bias is always neutral. For the daily, my bias is definitely short. I have to have that, so that's what I'm looking for. I'm not looking for longs, but if we come above this, then I'm looking for longs. My bias will flip from that neutral perspective to positive. At the moment, looking at short, negative, if you want to look at it that way. So this is my positive, negative area. At the moment, until price tells me that, I'm looking for shorts. So on the 30, we got this drop base sort of drop, pull back. I was already entering. I could have got a better price, but I just entered. I was just waking up. I didn't want to miss it. And my stop is only 3 pips above this level. What was demand becomes supply. It's my flip zone. And then we can have an ABE. So I posted that. ABE, and I believe price had spiked through. Actually, it wasn't that. It was more from that pivot here. Now we had this one. So this is the ABE. Now this I look at as a fake out. I mention this because my stop I've not moved, because if you enter on an ABE here, your stop could be quite tight. You would have been stopped out, and then you miss this big move. So my stop is here because it is the flip zone area. And I know that if we come into fake out, the odds of it working to short at this big daily ABE are very low. So that's all it is. It's like, I don't really want to be doing that now. Where here, it was at the trend line touch. Here is not. So I want to make sure my stop's above the high. If it's above the high here, there's a potential for breaking out very, very strongly, because we're not. It's either fake or break. That's my motto. And it's looking like double top is very, very low probability. So the breakout is what I'll be looking for. So now it has done this impulse. Okay, this is why I'm making this video. It's followed what I expect. Does not mean it will work. So if it comes back and stops me out, that is me cease trading until I reanalyze later, until something makes logical sense based on what I've just explained here, what I explained yesterday here on the Discord group, and what I've explained here. Because otherwise this could bounce about here. It could bounce about here all week, and you'll be just trading on emotion. I need something solid. And if it bounces around here all week, then I start to get a range, potentially, or some kind of fake outs again. I don't know, or breakout. We'll have to wait and see. But this is what we've got now. So I'm going to adjust my trend line, which is nice now, because we're now expanding. You've got to think of price moves two ways, really. It moves from the outside in or the inside out. And when you're at an area like an ABE, you want to look from the inside out, and that means you're going aggressive, okay? If you wait for the outside in, which is breaking this 240 first, that's the safe way of doing it. It's confirmation. Once you're below there, you're coming up, you're looking to short. There may well be on the 240 a new ABE. You've got to understand time is expanding. It's a bit like that movie with Leonardo DiCaprio when they go inside a dream, Inception, in a dream, the dream gets slower. That's trading, basically. So, you know, you've got to allow it to move. And when you understand that, what side of the time frame you're on, and you're in sync, then you're on confirmation. So if you're trading lower time frames, you should really only be looking for longs. But when I get to a bigger time frame turning point, I might start look from the inside out, which is looking on really low time frames and then expanding it, expecting trend lines to break. They become hurdles to me. They become hurdles, not ABEs. So when we break here, day trading is now looking to short. When we get to here, profit taking is probably going to happen, and then you'll be starting to look for longs. So if the 1 minute start turning the 5 minute, you'd be looking for longs again. But me, I'm going to be holding because I'm at the extreme of the rubber band. I expect it to come back. How far? I don't know. And this is trading. If your rules, if you come down here and you think I'll take off my position like you did yesterday as a star, it's great. But what if price just based and then dropped and then hit this target by today? Then you'll be going, fuck me, why didn't I do that? This is what I'm talking about. That's emotion. Have your trading strategy and stick to it, whether you're taking 3 to 1s, 5 to 1s, or you're going for 15 to 1s. And I have my rules and regulations around that. So from here, when price reaches the 50 mark, which is here, then my stop goes to break even because I'm expecting possible bounce. How high, I don't know. Hit a trend line, or don't hit a trend line, create a trend line like this and drop lower. Boom, ABE, short from here, confirmation, big confirmation under here, and you know you could take a trade there. But my trading from here, and I'm talking, let's get this drawing tool out here so you absolutely understand what I'm talking about, because this is, you know, gold dust. I've never probably been able to get it through as clear as this, because it don't always work, you know, and then price change and people go, that don't work. It's not that. Let's say price comes down to here today, bounces up, creates this trend line like this. We've got an ABE to short here, but we're in the middle somewhere where my stop is now here. Okay, let's ignore that. My stop is here. So what could happen? You could have all sorts of this going on, and then eventually boom and boom, reach the target. So you have to trade that accordingly. You have to follow. If you want to day trade, you need to see what the 240 structure and pattern is there, and you trade that accordingly. But your targets are going to be here, your stop's going to be there, and you're not trying to go for this because you're going to get stopped out, and then boom, it falls. That's what can happen. I'm only speculating where people go wrong there. So what I'm expecting though is move down to here, where Astar will probably take his profit, or at least most of it, off. And then what you can do, if you took it all, is watch this move. The problem is, let's say you get in here. Let's just say you do get in here. Your stop is here. You know, you go for this target. Like I said, you could bounce again from here, come up, and then this happen. And then you've got a different trend line. You know, and you don't know how to get in. There's no pattern until we get that ABE. Then I can understand the stop being here, watching for fake outs. No different than we're doing on the daily 240, 60, but using a 4 hour, 1 hour, and a 5. You know, whatever you're watching in that area in a 1 minute. So you could, and then it might come out and fuck about and all that. Meanwhile, my stop is at break even, and I'm just letting all that play out, diddling in the middle for my big overall daily target. Now it could come all the way down. That's too low. Let's just get rid of all of that again. So mine could come down, for example. We could have a strong move down, it break this, come up and do this all the way to this area. When we've reached about 80%, okay, this is the trade management when I'm catching the chart pattern, or the ABE or something like that. This is the E entry area. So I'm expecting my trade management price to reach 50%, and then my stop will go to break even. Then when it reaches 80%, my stop loss will move to the 50%. Now this is just me statistically what I've noticed over the last 15 years of trading. So that's my trade management. It gives it room to sometimes breathe and then drop again, like to this trend line here, where would be the E entry. Okay, so it all kind of makes sense. Now you've got an A and a B and an E, and then my stop loss though is around the 50%, normally above that area. Now once it starts going below the 80% like this, then I get aggressive in that area. I don't want to give back 80%. That's all it is. I've got an 80% rule. So when I start reaching 85, 90, I'm watching the structure on the smaller time frame and I manage it. Okay. And then if price is looking good, I might stick my stop there around about that 90%, move the target, see if it breaks, because these lows are either going to bounce or it's going to break through like butter. And then we've got a big breakout to the downside. My stop's in a very safe place, and then I can now lock in 90% of my profit and let that fucker run. Okay. And then if we come back to the daily, let's clean all that up. If we come back to the daily, what we might have is just like this candle here, break. And then all I'm going to do is whatever structures in that daily on a 60. So if we come down, it might have a very nice, big strong daily here, but it might have on a 60 a very nice structure. I will just manage to trade. And sometimes at the breakout area, I will add to it then. Okay, so I'm not going to add to this overall position until we've broken below here. Then I might add on the breakout or pull back again into some form of supply, and then I see it to go, where I would be managing this into 110, 120%. Does that make sense? You've reached 100%, you're going into overtime. Then I start to add to a position. So when you look at the big ones, Milan, that's what I said, you know, when you add to a position, you need to add where you know that you'll be taking a trade from, that where you can have another huge leg, a breakout, another big term strategy. But the trade management might be different because it's a breakout. Okay, so we break from here, we might not be using this trade management. I'll be just managing behind whatever levels are created or how far that breakout goes. You need to manage it a bit above all those levels, or you wait for the nice structure on a 60 and you just keep managing. You know, nothing wrong with that. You can keep adding if you like. The problem is though, once you got stopped out of your adding position, you should be stopped out of your overall position. You should cease trading. Simple as that. So that is pretty much what I've come onto the Discord group. So let's just have a look at exactly what was said. So this is how we got in yesterday. I was showing the ABE on the videos. ABE right there. This is where Astar got in. There was his take profit. So he's gotten into the trade here. He's worked out his take profit and Is that the one where you've taken a take profit? Yes. And then I was talking about also there is this is like on a sort of 1 minute kind of area. We've got this what I removed again, the same pattern. There's an ABE where my stop loss is above the high because we're at the extreme. So there's another ABE. You was talking about it. Now I understand the AB pattern, which is good. Bit of a fake out there. You know, it can happen. That's why my stop's above, because we're in that area. And this is why I put my stop above the high. So I explained why my stop is not moved, and that was the true supply, which price did keep bouncing from before breaking higher into hence fake out. Yeah, and that's what I said. If stopped out, I didn't know it was going to drop yesterday. I need to analyze before making any decisions. So that's what I've done today. It wasn't an hour later because the price dropped. You reached your target. Fantastic. And then you try to take it again. Now, I want to talk about this, Astar, because this is for the Discord group. You said you took it again, you're in a level. Now, I can understand that because what I was talking about, that 5 minute area, that strong, true supply, absolutely. The problem is you should have waited for some confirmation. That's all I would have done. Got a lower risk and waited for confirmation. You might have saved a loss. You might have done. If you want to do that, fine. Take the loss. If that's your rules, happy, take it. If you're in the trade now, great. You've got to stick. You've got to make these rules and stick to your rules. There's no right and wrong. Okay. Over time, you make money if your reward to risk is working for you and your win-loss ratio. Yes, I said we'll be announcing a live one soon, so we'll do that. As for the live, I've not done a live for fucking hell a long time, years, because I've restarted this and trying to develop this group slowly into what we're getting here. Very quality traders. Doesn't matter, we've got 100 traders in there. If I get 2 or 3, 4, we're all on the same page. It's great. We can expand out to analysing other markets, the stock market later on. I'm talking later. There's, lots of things we can do. Get together, get a group. We could even potentially open up our own little mini institution, stuff like that. All later, all when I've got time, when I get into retirement. I'm running other businesses. My wife's got a business. I actually drive off of my own business as well. I'm making money wherever I can make money. Right, so you put re-enter the while price moves into the 4-hour supply. I don't know where the 4-hour supply is, what you're talking about back here, because it might be there's loads of supply and demand everywhere. It was into the daily ABE. Okay, that's what you'd really want to be talking about. You're in daily ABE. You've got this little break, whatever you've entered the trade. That's great. Your reward to risk is nowhere near as good as mine, but you're doing the right thing. So basically, this is what I put. I got stopped out for a loss, but my price may have had its fake out, so I'm waiting for confirmation. I see it on a 30-minute time frame. That I've just everything I'm explaining here is what I've just shown you on the video right now. What I'm just showing you. So there's my areas. There's my level. What was demand becomes supply. Talking about potential breakout because of these. This is the fake out. I didn't go into detail, so it could fake, so we could end up with a possible break to the upside. This is the next hurdle, so this is your profit target if you want to take some position off. Like I said, I will not, because I know over time how this high reward to risk works for me, so I'll be just holding on to that. So that is what I posted there. The other thing I was talking about, there is a 15-minute trend line break. So this is where I'm talking about the double top. This is that double top. But this is why I'm not putting my stop above here, because I'm expecting it to fuck about and potentially break to the upside. There is something wrong that my patterns that I look at, not developed because they're there all the time, but what I look at statistically is telling me something is not working. There's more money. There's something else going on, because I don't have a crystal ball. I can only follow my patterns that tell me when something is right and something is wrong. So talking about potential fake out with the daily candle. This is all done from my phone, by the way. So my stop stays above the 30-minute supply, but price may drop like a ton of bricks from this 15-minute ABE. Now, it actually faked out from that 15-minute ABE, this one. But I said I'm not moving my stop. It actually could do this and drop. Okay, so this is an ABE, but we're in a big turning point. It's a low time frame. I need to give it where my stop is, my true supply is. I want to keep my stop there, give it room to breathe. Not only that is because I put my stop in, my rules say I can't move. I didn't really say that there, but my rules can't move my stop until I reach 50%. So I'm in it for the big one, or I get stopped out again. And then I've had 2 stops. I sit on my hands and I keep rinsing and repeating over the weeks, over the months, and catching these big 15, 30 to 1s like trades. So my stop stays above the 30-minute supply, hopefully drops like a ton of bricks from that ABE. It's all setting up nicely, but like I said, if stopped out, then something is not right, so potentially a breakout to the upside may happen today, as it's Thursday, which will result in a strong green weekly candle close, hence possibly breakout. So that was what I'm saying here. So I'm looking very neutrally at what can happen and using my breakout strategy, what I look for, the fake out, which I've explained there, no double tops into the fake out, just start to look, because price moves fucking normally very quick. It should move up and should move down. Now, with that said, and I'm posting this video, this may well fake to the downside, hit this area and bounce up and close high. It can do. I will watch and analyze. My point is, I'm not going to trade on emotion. I'm not going to think I've had a few losses. I feel like I've got to get a winner. I don't need to get a winner. I will have my winner. I know I have my winners. I don't need to have it today. I don't need to have it tomorrow. Next week, I'd have it the week after. Hit a 30 to 1 or 15 to 1 or catch some nice day trades at 5 and 6 to 1. And before I know it, I'm backing them in positive again. So sometimes for days or weeks, you have this account up, down, even slightly lower, and then boom. And then boom, and then a little bit high, boom, and then another little grind down, and so forth. So that's how my equity curve is, and that's the way I'm trying to get it through to you guys. So that's it. I'm going to wrap this video up. Very good there, a star. Very good. I will touch on gold then for Mananas. Let's have a little look. I don't even know what's going on in gold. Look, still going up. I hope you are managing this or took some of your position off here, and then look, price has pushed higher. Hence why you've got to give it a little room to breathe sometimes. I'd have probably took a little bit of position off here as well. I would have taken some off there. It doesn't matter if it's 10%, 20%. Start unwinding it because you're going against the fucking trend. Okay? To add to this position, I wouldn't, because you're going against it. Now, this could go all the way up to here, Bananas. It could. But have rules. Think rules. Don't think emotion. Think rules. Okay? We've also coming into, this. So when you get close to that, I would definitely be exiting a position or managing it very aggressively. very, very aggressively. So now I'm looking at, if the euro does drop now, and it's a bit in sync with this gold, then we might be turning on the gold. So I'm only going to have a little look what's going on. Hence this close below. That's kind of in sync, is it not, with my euro 60? You know, but if my euro is faking down, for example, on a 4 hour, it's going to come back up, and we go for the breakout, because if there's big institutions want to break it today, they're going to fucking break it to the upside. They're going to swallow me up. Hence, don't trade on emotion. Don't take losses. So there we go. So then what might happen is you're managing somewhere here, and boom, it pushes higher. So this is how I would say you have to play both sides of the fence for taking profits, where you would be thinking people might be shorting because of the breakout and so forth and stuff like that. And then you're building up that neutrality between longs and shorts. You know, you're now looking at price in a different way, not with emotion, but with technical understanding. Give us a thumbs up if you've got to the end. Just if you've got to the end. I'm not making money from YouTube. I've deleted videos that had 35, 38,000 views before, because I've evolved from then and I can explain it better and clearer and more understanding. And it's not about the views for me. It's more about, did you understand it? If you understood this, just give me a thumbs up. That's it, guys. Safe trade. Oh, let's have a look. Let's have a look what's going on here. Oh, yes, this is fake out for my trade. Also, stop loss hit. Ah, yeah, you had that stop loss. Yeah. So your supply marking 4 hours, excellent prediction. Your supply marking 4 hour supply is excellent prediction. See, take profit hit. Yeah. Okay. I don't know if I marked out a 4 hour supply, but let me just have a, for those that are still watching, let's try to understand what we're talking about. This 4 hour supply. Let's go to the euro. That would help. Let's go to 4 hour. Yeah, there is no 4 hour supply. What I'm talking about, remember, because I don't want you to be confused at the start, is this is an ABE turning point. Now, when I'm at a big chart pattern turning point, I said to you earlier on in the Discord group, I get aggressive. Okay, that doesn't mean I'm taking 30 trades. It means then I'm using the inside out principle. Maybe I should teach it like that. There's a good guy. If anybody wants to trade from the inside out using just pure supply and demand, it's a one trick pony kind of way of looking at it. But he's evolving too, and it is Moneyball Austin. I'll go on YouTube and show you, because I love people who, and he's a fucking excellent teacher. I mean, this guy, I think he used to teach baseball as well, hence Moneyball Austin. But he is absolutely sticks to, you know, he's got his way of doing it and he sticks to it. Please have a look at it. You know, the guy, I'd love to chat this guy on the phone, because the way he was taught was correct, and it's just the inside-out principle. But I also use the outside-in principle, and the outside-in is, and I'm going to give you actually a little bit more of a lesson on that. Let's talk about the outside-in principle. This is the inside-out. This is how I used to do it, kind of online trading academy, but it didn't work for me on the long run. That's all it was. Just for me, I like big targets. He likes 2-to-1s. Works for him, and he's teaching it that way. So let's talk about outside in. If you're the daily's down, the weekly's down, the monthly's down, but look, you start to create this. We have got a change from, let's do it on the 60. Let's do it on the 60 so you can really see. You've got this downward movement here, and then there was some kind of, even from the top here, eventually some kind of change starting to happen in that breaking of the pivot points, and we've got a double bottom there. Okay, we're not going to talk about that now, but let's just bring it down to the most recent low. Where's the low here? So I need to come back to the next one that created a low. This is the structure. Once you're above that, then we're now buyers could be long. You want to be going long, you know, long. This is when below here you want to be careful. You know, this was big news announcement. I put that on there. You know, we had the Christ, I can't remember what it is, but it was a big news. It pops up on my phone. If they pop up, then I'm a bit being a bit careful. So you've got this big outside candle, so to speak. You know, up, down, close, and then down and up, close. So the big volatile candles. But generally, you're going up. So in this area, and even once price has bounced from here and gone up to here, you've now got this AB trend line, so you know the direction. If you're in the direction of your ABE, you only want to be looking for longs. So what I'm talking about on this 60 is once you're above here, any break of the red candles down, any of those red candles are trading opportunities to go long on a 5 minute or 1 minute. So where I've just put them trend lines, I'm just going to go into, because you're in sync, the 5 minutes in sync with the 60. So your inside candles, you're going from the outside in, everything below it's in sync. Okay, you keep it in sync, like top down analysis. And then when you get to an area where you're looking for a major turn point, you work from the inside out, and you need to leave room to expand. So let's now have a little look on the 5 minute, going back and talking about where the change was. Where's them? Maybe back a bit further. Where are we? Yeah. Is it? Let me just zoom right out. Ah, okay. It's not showing, but this was the area. This is the 60 minute again we're talking about. Remember that 60 minute? I'm looking squeeze candles on the 5 minute, but this is the overall structure. Once we're above here, I'm saying any break down, these candles here, this is the ones we're looking at, really. Any 5, 10, like break of this sort of structure, we'll look at this. This is how I'd be day trading. My bias would be like, I only want to be in sync with the 60. So think if the 5 minutes in sync, the 1 minute 15's got to be in sync with the 60. The 60, we want it to be in sync with a 240 and a daily, then you can do it that way. You can wait patiently, which is I'm getting in now before the 60 is turning and the 240, which will then be in sync with the daily, hence going for the big target. So let's have a little look in that area. And then we'll go down to whatever the structure is. So this was still grinding up here. This is what I'm talking about. We started breaking the lows here, but the 60 minute is up. Okay. I want to see what's going on. And this is the main one. Boom, here. And even these ones after. Anything that's downtrend against your 60, you want to be looking at that structure. And this is where all your trading is above. All your trading is above. So let's go down to, if I can get the data now, we're 4th of October for 1 minute. Gone too far. Is that data? Let me just, some data missing here. Let me refresh a minute. Is it going to give me the data? Let's put the conspiracy hat on. They know what I'm trying to do and they don't want me to show you it. Tools. This is normally the history of when I'm backtesting, but I'm just going to see if this helps with this data. Right. What's it up to? Yeah. Just let me download this data a minute, because this is important, because we're talking sticking with the higher time frame trend. Let's get that data, because maybe there's some data missing there. Right, come back. So we're looking about the 4th. Please. Now it's not giving me no fucking data. Oh god, what the hell's happened? Let me pause a second. Right, for some reason there's a big gap of data missing. I can't get it back. So let's do exactly the same thing. After this high, and we started to push up here, so we're breaking whatever's happened here on the 60, and we're moving up here. Same thing. Let's have a look what's going on. Break down here, as we're moving into this daily area. But we're getting all these any red candles down. I'm looking at the structure in these red candles. That's what I'm talking about. So let's have a look from the sort of 10th of October in the red candles on the 1 minute. So we're talking about from the inside out now. Let's get to the 10th. Won't take me too long. 10th of October. And this is 1 minute. So this was the move up. This is still the retracement. So you can look at all the supply levels that are being respected at the moment until this point here. So I'd be watching that and then looking for my breaking of supply and then going long. Almost, well, there's a double bottom here. You could have had a quick target there. I would be going for targets up here, got stopped out. Price moved down. Okay, so you've had one loss, moves down, comes up, closes. There's actually a drop-based drop here. So this is where I'd be looking for my next break of trend line, the structure. So we've got a drop little base green, red close below, that is a level, and a rally, close above, double bottom, and then you hold, let's put that in, nice double bottom. You can take targets on the way, you could have a 2-to-1 from here. This is what Moneyball Austin's talking about, but this is the way I'd be doing it, because I know how the structure works. And eventually you would, let's put a line in for your target, up at the solid bodied candles there, and then you've got another one here coming against a trend. I just want to talk, so we've not reached target on that one, but that is the trend line. So you need to break above that, which is going to be a 5-minute, close above. Okay, then we've got a downward, so if you're using the 1 minute, you would wait for that breaker structure again. Break, double bottom here, but put your stop below the low, because this is going to be a 5-minute, and then you'd be going for targets up in this area, or you might have had a first target here which you would have hit, and then you would have been stopped out. And then we've got another, let's see if we get stopped out from this one. Now that green one is where we're entered here, so we're still in that trade, but we're having more trades. And in fact, there's many, I mean, you're looking for the big move back down. You're looking for the red candles on the 60, yeah? You're not just looking for every downward structure. This will probably be a red candle on the 60. We'll have a look in a minute. And another break, close above what was supply, pull back. Now we've got an uptrend going on here, an ABE, because we made a high to here, pull back, and then again reach target here, and actually come up to the target area eventually, which is just above these highs here. So there would have been multiple ways. There's also this, that may well have been a red candle. Break, pull back, didn't quite reach this nice little demand level, or did it? Let's have a little look. So it's just knowing which side of the fence you want to be playing. No, it didn't really reach that. You wouldn't have caught trade there, but that was a bit of a break. Again, reached the target area, and then we've got this big move down. Again, it seems to hit those areas of demand. So another big move down. So that would be another, that was that big move we looked at where I was shorting, so I wasn't looking at trying to take that, but it still works. So once we got above from that ABE break, pull back to what was supply demand becomes supply becomes demand. So this is really a supply level here, rally base rally, took this out, becomes demand, and price has gone, not reached high enough, and then this is moving now into what's happened in the last few days. So let's go back to the 60. Those areas are these red candles. Okay, see red, you need to watch what the structure is. Even this structure here, what was the structure coming down on that area? So when you break that structure, but you want to be seeing that there was red candles, you know, not breaking the structure in some of these greens. And if it's messing about like this, stay away. But you're looking for those pullbacks because you're in direction of the 60. Okay, as long as you've got a 60, you're above that 60 uptrend, you can then wait for, or above a 240 uptrend, you can wait for a 15 to be in sync, then a 1 minute in sync with a 15 or the 30. That is from the outside in. So you're starting higher time frame, top down analysis. When you're getting into an area where you know you're looking for the break and the fake, then you're really looking from your inside out, because otherwise you're going to miss it. And that's where it can get emotional. Okay, but fuck me, huge opportunities. That's it, guys. Thumbs up. Safe trading. See you next time.